Ever wondered if men and women approach money-making differently? It's a question that's sparked curiosity for ages. Society often paints a picture of men as the primary breadwinners, while women are commonly seen as the more cautious spenders. But how much truth lies in these stereotypes? Are our brains wired differently when it comes to generating income? Or are these differences a product of societal expectations? In this video, we are going to delve into the psychology of money-making and how it differs between men and women. Men, traditionally viewed as the breadwinners, have a unique perspective on money-making. Let's delve into the typical male approach to financial matters. Over the years, studies have suggested that men tend to be more risk-taking when it comes to money-making decisions. They are often more willing to take financial risks, whether it's investing in a new business venture or making bold moves in the stock market. In fact, a study by the University of California found that men are twice as likely as women to take substantial financial risks. This risk-taking behavior can be traced back to our evolutionary past. Men were traditionally hunters competing against each other for resources. This competitive nature is still evident today in the financial world. Men often view money-making as a competition, striving to outperform others, aiming for the highest returns and relishing in the thrill of the chase. Furthermore, men tend to focus on long-term investing. They're more likely to leave their money in investments for extended periods, allowing for the potential of higher returns over time. A study conducted by Warwick Business School found that men's portfolios tend to outperform women's by approximately 1% per year, due to their preference for riskier long-term investments. However, it's crucial to note that these are generalizations. Not all men are risk-takers or competitive in their financial approach. Some men are conservative with their investments, while others may not engage in investing at all. These tendencies are not exclusive to one gender and can certainly be found in women as well. Moreover, societal and cultural factors also play a significant role in shaping our attitudes towards money. For instance, societal expectations often pressure men into adopting a more aggressive approach, reinforcing the stereotype of men as the primary earners. So it seems that men generally lean towards riskier, more competitive money-making strategies. But what about women? Women, historically seen as caregivers and homemakers, have a different outlook on money-making. While men are often driven by a competitive spirit and long-term financial growth, women tend to approach wealth creation from a slightly different angle. For many women, the primary goal is not just about amassing wealth, but about providing safety and stability. Studies have shown that women typically opt for less risky investments and prefer a steady, predictable income. This approach is often referred to as being risk-averse, but it might be more accurate to say that women are risk-aware. They tend to weigh the potential downsides and upsides more carefully and are less likely to take on investments with high volatility. This tendency towards safety and stability often results in a focus on short-term gains. Rather than putting all their eggs in one basket and hoping for a big payoff down the line, women often prefer to spread their investments across a variety of options, ensuring a steady stream of income and reducing the risk of a major loss. Now, it's important to note that these are generalizations. There are many women who are risk-takers, and many men who are risk-averse. But on a broad level, these patterns do tend to hold true. So why this difference? Some researchers suggest that it's a result of social conditioning. Women have historically been the caregivers, responsible for the well-being of their families. This role may have shaped their approach to money, leading them to prioritize safety and stability over high-risk, high-reward strategies. Of course, this is just one piece of the puzzle. There are many factors that influence our financial behaviors, including our individual personalities, life experiences, and even our biology. It appears that women generally favor safer, more stable money-making strategies, but is one approach better than the other? Let's delve deeper into this in the next scene as we compare and contrast these perspectives. Now that we understand the general tendencies of men and women when it comes to money-making, let's compare and contrast. Men, as we've seen, tend to be more risk-takers in the financial world. They have a tendency to chase high-reward opportunities, even if they come with a higher risk. This bold approach can lead to significant financial gain when it pays off. However, it can also lead to substantial losses when the risks don't pan out. On the other hand, women typically lean towards a more conservative and calculated approach. They prefer steady long-term investments that provide a reliable return. This approach may not yield the same jackpot returns as high-risk investments, but it provides a steady growth of wealth over time. However, it may also mean missing out on significant profit opportunities. So let's look at the strengths of both approaches. Men's risk-taking can lead to significant financial gains in a short amount of time, which can be advantageous for quick wealth accumulation. This approach can be beneficial in volatile markets where swift decisions can lead to substantial returns. Women's conservative approach, on the other hand, offers stability. It provides a safety net, ensuring that even if some investments underperform, others will continue to generate income. This approach is particularly beneficial in uncertain economic times or for those seeking a stable financial future. However, both approaches have their weaknesses too. Men's risk-taking can lead to substantial losses, potentially wiping out previous gains. Women's conservative strategy, while reliable, may not yield as much profit as riskier investments. What's fascinating is that the most successful investors often incorporate both strategies. They balance high-risk, high-reward investments with more conservative, reliable ones. This diversity in money-making strategies can lead to robust financial success. So, while men and women may approach money-making differently, both strategies have their own merits. It's not about who is better at making money, it's about understanding these different approaches and leveraging them effectively for financial success. As we've seen, men and women may approach money-making from different angles due to societal influences and personal preferences. We've examined the male perspective, where traditionally, risk-taking and competitive behaviors have been encouraged. This can manifest in aggressive investment strategies and a focus on high-return ventures. On the other hand, we delved into the female perspective, which often emphasizes stability and long-term planning. Women are generally more conservative in their investment style, opting for safer options that promise steady growth over time. But it's important to remember that these are not rigid categories. Men can be cautious and meticulous, just as women can be daring and entrepreneurial. It's all about understanding your own strategy, playing to your strengths, and learning from others. In the grand scheme of things, it's not about gender but about individuality. Each person has a unique approach to money-making, influenced by their life experiences, values, and aspirations. So instead of trying to fit into a specific mold, embrace your own style. Moreover, it's crucial to remain open to learning from others. There's a wealth of knowledge out there, from books and seminars to conversations with successful individuals. So keep your mind open, your curiosity piqued, and your willingness to learn intact. Remember, there's no one-size-fits-all approach to making money. Embrace your unique strategy and always be open to learning from others.